What's up, gang? Welcome to The Greatness Machine. I'm your host, Darius Mershazde. I'm so pumped to have you here with me. Now listen, The Greatness Machine, we're about two things. Number one, people who are living their passions. And number two, those who are creating greatness in the world and doing both of these things despite the odds against them. Each episode, we're going to feature interviews with game changers, business leaders, telling us their origin stories, what made them tick, what got them to where they are now. Why? So it can help you step into your greatness within your life, your business, and your career. Occasionally, you might hear a few solo episodes from myself, moi, as I leverage my 20 years of entrepreneurship as a CEO and founder to help you grow and level up in your journey to scale your life and your business. So come be a fly on the wall, enjoy the conversation, and I'm stoked to have you here with me. Guys, welcome to today's episode of The Greatness Machine. I'm your host, Darius Mershazde. Boy, do we have a special guest. Rebecca Homkes is in the house. What's up, Rebecca?
Hey, Darius, great to be here.
Oh my gosh, I'm so pumped to have you on the show. And by the way, audience, I screwed up. It's Dr. Rebecca Homkes, but I'm gonna call her Rebecca. Is that cool? You mind if I drop the title?
Please do. Yeah, let's be friends.
All right, fast friends we are. Rebecca, do you mind if I do a little bit of housekeeping and then we'll jump in?
No, let's do it.
Does that work? Cool. So, guys, welcome to the show. For listeners who are new to the show, The Greatness Machine, we're about two things. People are creating passion. Whoa. I'm messing up today. Hey, Sid, let's cut this out. I'm going to redo this part. Sorry, I've never messed up the intro. This is a first for me out of like 300 episodes.
I'm intimidating you, aren't I, Darius? That must be what it is. I'm kidding.
I'm kidding. Hey, Sid, we're leaving all this in. Hey, this is how the sausage is made. So, for listeners new to the show, The Greatness Machine, we're about two things. People are living their passions and those creating greatness in the world and doing so despite the odds. And Rebecca's not short of passion or greatness. So, this is how I found her work. Her PR agency, 40A, hit us up. They hit us up, a lot, actually. We get a lot of requests from them. They like our show. Sadly, I'm not 100% like it's a lot of people that just their content is not perfect for the audience. So it sound like amazing people, but not right for the show. I was telling Rebecca, it's pretty hard to make it on the show. Probably for every 100 requests, I'll book one. So you're in the 1%. Right. And it was because, she's coming out with a new book. Obviously she has a cool background. We'll talk about that in a second, but, her new book, Survive, Reset, and Thrive, is coming out. It's in pre-order right now. So when's that coming out, by the way? When's your book launch?
February 27th, so 2 weeks.
Oh, shoot. So I'm going to fast track this episode so it comes out to support your book launch. See how good of a human I am?
That'd be awesome.
So we'll bump that up. I just bumped her show up 3 months from when it's going to come out. So, there was a subheading in there talking about uncertainty and volatile times and how companies and businesses and folks can thrive despite that. And I read that. I'm like, and it was something that struck me. I was like, wow, I'm super interested to learn from someone that's been there and done that in an academic setting, from a consulting standpoint, someone that's really done it from a different perspective than my own. My own is from the perspective of running businesses in a volatile environment and getting my ass kicked and then like managing through it and learning. And I heard a really interesting quote by, what's his face? I'm going to blank his name right now. I'll remember it in a moment, but Howard Marks. I was reading one of his books around market cycles. And he said, wisdom is what is gained when you don't get what you want. Right. And I'm like, oh my God, I have so much wisdom in my life. But a lot of it stems from this idea of building businesses in volatile environments with uncertainty, and things don't go the way you want them to go. And then you kind of manage around it. So I have a lot of personal stake in like believing I understand how to do it. But I was like, I want to hear about this. This is a book that sounds interesting. I want to read it. And so I asked Rebecca to come on the show. That being the case, I'd love it if you wouldn't mind, Rebecca, if you don't mind giving our audience a little bit of your background as far as just like your professional, you have, by the way, she has a very decorated background. It was so much there. I was like, give us like the 3-sentence, like, hey, here's my top, why Darius asked me to be on the show besides the book.
Yeah, absolutely. And thanks again for having me. So I specialize in high growth strategy. So that's developing strategy, executing strategy, innovating on strategy. I'm a lecturer at the London Business School, as well as Duke in our corporate executive education, and an advisor to Boston Consulting Group's University. But I spend more than 80% of my time working directly with entrepreneurs, many YPOers who are looking to grow, rebuild, and thrive through extreme uncertainty. And that's what motivated me to write the book, to kind of put some of the playbook into words.
My audio cut out in the very beginning when you were saying what you said. So I want to make sure the audience got that. Just the first half of that. Say that one more time.
Yeah, no problem. So I am a high growth strategy specialist, which means I focus on developing strategy, executing strategy, and innovating on strategy. And I'm a lecturer at the London Business School as well as Duke, and also an advisor to Boston Consulting Group's corporate university. But I spend more than 80% of my time working directly with organizations and entrepreneurs, many YPOers who are looking to build their companies and thrive, especially when facing uncertainty.
How does one, so you have a doctor in front of your name, but how does one just like get into like doing strategy? I mean, I love doing strategy work, and mine comes just, the only reason they'll talk to me is they're like, oh, that guy's built what I want to build. And they don't even know that I'm going to teach strategy. They don't hire me for that. They hire me because they want to, either A, I'm giving them money, I'm growing their business, or B, they want to build a big company. And they're like, oh, Darius has been there and done that. I want to bring him in. What, like, how did you get into strategy? Like did you go to school for that? Did you like start off as an advisor, then go to school? Like, give us some of that background.
Yeah, absolutely. So my PhD is actually in international economics. And when I was doing my PhD, I was really focused on organizational performance, and I was working a lot of things on public-private partnerships and wanted to kind of understand what caused organizations to perform and do better than others. And I think like many things, Darius, I never intended to be a business school professor. I never intended to run my own consulting firm. I just happened to kind of, opportunities kept opening. I kept kind of zigging and zagging on what the original plan was, and now just kind of fell into something I've been doing for almost 15 years and still love passionately.
That's cool. And so, how did you end up deciding to go to the UK? You did undergrad here in the States? Is that correct?
I did. That was in no way on the plan, was to go to the UK. So I actually grew up in Michigan and Indiana. So I'm a Midwest girl straight through. And when I was in middle school, high school, could not wait to get out of Indiana, right? So I had all of these plans to go to these other schools, got accepted into all of them. And then IU offered me a really great full ride scholarship. So 4 years fully paid, and I could spend 2 semesters anywhere in the world that I wanted to. So I took that, went to IU, got to live in Australia, got to live in the Netherlands, got to do super cool internships because I wasn't worried about paying for school. And then I was going to actually go to either McKinsey, Bain, or Goldman Sachs. So I was sitting there my senior year of university, deciding between these 3 great firms. And my university nominated me for the Rhodes Scholarship and the Marshall Scholarship. So I ended up winning a Marshall Scholarship, and there's around 30 in the country. Moved over to the UK to do 2 years of a master's degree. After my first year in the master's, got directly accepted to the PhD program at LSE, was still actually trying to move back to the US. So I wanted to get back to work. And luckily had a really good buddy who was like, are you crazy? You're getting a fully paid for PhD from LSE. You're going to stay and you're going to do this, and you can put off going back to be a consultant for another couple of years. Best advice I've probably gotten among any other set. So stayed at the LSE. When I was there, Darius, got super lucky that my first year at LSE, the London School of Economics was actually partnering with McKinsey, the consulting firm, to do a study on organizational performance. And it was one of those funny things. One of my professors was like, hey, you know consulting, right? And I was like, yeah. Like, and you know economics, right? Yeah. Well, like, I think you should apply to be part of this program. Did it, became the global director the year later, and got to train teams all around the world. And what we were doing is they're trying to understand if better managed firms were more productive. And you think, well, why even do a study like that? Of course they are. Well, no one had ever proven it, right? Do all of these things we talk about, like performance tracking and talent management, doesn't matter for performance. And so we built this multi-year, multi-country study, trained MBAs to interview plant managers all around the world. And turns out it really matters, like statistically significantly, plant managers and manufacturing firms that know how to manage their teams outperform everyone else. Now, the timing matters. This was 2008. Right. So going into the great financial crisis, and we have some really powerful information for governments, like, hey, we've got this low capital investment way that you can boost national GDP. Like, let's just give, your plant managers and managers some basic management training. So while I was doing my PhD, I got to run this global McKinsey LSE project for 4 or 5 years, did that, loved it. And then when I finished, didn't want to go back to a consulting firm, loved doing my own thing, had a great colleague at LBS who asked me to join them for 6 months. As usually happens when you say yes to a couple-month gig, and I'm sure this has happened to you too, 6 months became over 10 years, right? So teaching the executive program at LBS, and my first program there was a YPO program. So when I was only like 27, 28, got to teach on a YPO program. There was instant fit. I loved working with entrepreneurs. I loved them who were just solely focused on value creation. So fell into it, said I would do consulting and teaching till it stopped working. And it's many, many years later, and it's still working. And I just got, fell into something that I absolutely love doing.
That's so cool. So I'm forgive me, but so is the Marshall Scholarship like same Marshall as like the Marshall Plan person?
Yeah. So the Marshall Scholarship was started after World War II as a way to foster better relationships between the UK and the US. And what happens is at that time, there were around 30. There's a little bit more now. Universities nominate one person. You go through a very, very intense multi-interview, regional, and then national interview process. And then 30, university seniors are granted 2 years in the UK. So you get to choose your university. You get 2 years in the UK, fully paid for, 2 master's degrees, or the start of a PhD. And it was started again in this effort to kind of continuing these relationships between, US professionals and UK professionals. And so not only did I have that great experience, but I now have a peer group, of other Marshall scholars who are doing the most incredible things, not just in the US and UK, but all around the world as well.
That's cool. And so when you start to look at like coming out of that, and I just want to make sure I picked up what you put down. Yeah. When you were working with doing the PPP project through McKinsey, was the takeaway essentially what I heard you say is like, yeah, we these plant managers of these like large, probably like multinational corporations, basically teaching them like soft skills. Is it? Yeah. Am I picking up on what you just said?
Yes. So what we did, and it was really cool, and apologize if I geek out on survey methodology, but what we were trying to understand was really what was going on. And we built this, 20 so question interview grid, which was just a conversation. And it asked you things about how do you track performance, and do you set targets, and how do you manage people and give kind of performing employee reviews, looking at performance management and talent management and kind of operational management. And then we trained MBA students, and they would call up plant managers in their country of origin. So a Brazilian MBA student would call plants in Brazil, and an Irish MBA student would call plants in Ireland. And of course, these plant managers were so happy to speak to someone from their country who was doing their MBA in the UK. And we would interview them, kind of score them on this rubric. And yes, those would implement these, not just soft skills, but also some basic goal tracking and goal setting. And then we would kind of pull the actual performance numbers, and the results were just dramatic, right? And then we kept adding more and more countries to the study, and the results kept proving. So it was agnostic of industry, it was agnostic of size of the company, that having these basic management and leadership tools in place allowed companies to be more productive. And that's how I got into strategy. Was this methodology really interested a colleague of mine at the London Business School who said, hey, like, I would actually love to know if this applies to strategy execution. Like, are there things you could have in place to execute strategy that if you have them in place, we feel better that you're going to be able to do strategy. So we did something similar for execution. And I thought I'd be focusing on strategy execution, right? I'm about performance, I'm about results and goals. And in doing so, and I'm sure this echoes from your own experience, you realize that you can't have a great discussion about execution if you don't have a solid strategy for growth, right? A lot of strategies are just long PowerPoint decks or 3 vague, mindless goals on the wall. And so I kept having to go back in the value chain to really be able to draw on the thing that I knew would matter for performance. And that's how I ended up in strategy was, where I wanted to start. I had to keep going back because that was the root. Lacking that clear strategy for growth, you're not having a great conversation about the metrics and everything else you need to at the end of the value chain.
I have my own thoughts around this. So just so the audience is clear, like, what are the sizes of companies were you doing this with? Was it like these are large companies, or they're mid-market companies? If you had to kind of give a generalization, what would you say?
Yeah, so back when I was at LSE, it was mixed from kind of tens of millions to hundreds of millions to some of the multi-billion-dollar organizations.
Okay, so these are mid-market, lower mid-market companies. Sounds
Absolutely.
Like maybe at most was some small big companies, right? If you're in the billions, but if you're in tens of millions or hundreds of millions, that's like my business was a couple $100 million, and we had so I would consider us lower mid market.
Yeah.
And even the businesses that we're making investments in now are like tens of millions for the most part. And so, when you look at companies like that, those are smaller companies. Like, people, they don't feel like that if they're the entrepreneur or the CEO, but that's a small business. I think of micro caps like under $1 billion in revenue, right? For the stock market. So when you start to think of like, what was the number one thing that when you if you had to like had to pick one thing where you're like, hey, this is why they're not succeeding, what would that one thing be?
Yeah, so let's kind of pivot from kind of what I was doing during my PhD to kind of now, right? And then I think it's difficult. So now I work with companies between a couple 100 million to a couple of billion. So it still tends to be smaller. I work with many who are in the kind of the 15, 20 plus billion. But my sweet spot, I love taking companies on journeys from kind of 400 or 500 million to $1 billion or $2 billion. So that tends to be the majority of it. But I will work with some smaller, and I will work with one bigger. I know this is going to sound silly, Darius, but a lot of times it's, are you actually aligned as a leadership or management team on what performance or growth is? Like, you maybe wouldn't be surprised, but how many times the executive and leadership teams are not just completely misaligned about what they should be doing, but where they should be going, right? Because again, we articulate performance in some vague notions of leading the market or being customer centric or engaging our employees, but not actually aligning and saying, yeah, in 3 years' time, this is where we want to be. In another 3 years, we want to be here. And then kind of setting the right execution pathway to go towards that finish line.
Yeah. So what I just heard you say is basically being clear on where you're going, doing it in timeframes that are manageable. So not picking some like 10-year BHAG that's like so far out in the future that you can't really, figure out how to get there. And then reverse engineering that to like action steps today to then hold people accountable to it. Is that correct?
Yeah, exactly. And I'm sure you saw our listeners want me roll my eyes a bit at BHAG. Like BHAGs, they don't work, right? And they don't work for lots of reasons. Like, I love ambitious goals. I know you love ambitious goals. But the problem with BHAGs, and for our audience, they stand for big, hairy, audacious goals, is that all of your employees know they're not possible, right? And occasionally, and there's very few exceptions, like Mark Benioff at Salesforce has consistently been able to set these things and people work to them. I don't really have many other examples of those that can, is that when you give your employees a BHAG, they know it's not possible. So they recalibrate and they set their own goals. And so all of your key leaders around the organization, likely around the world, are actually working towards a different goal because they're all recalibrating what they think their boss really wants, which means their actions are now misaligned as well. So I like to say, like, the math has to work. The math can be pushing. The math can and should demand that we work in different ways, but the math has to work. And then once you have that finish line, it's just the anchoring notion of a finish line, like running a marathon. Now I can actually align my right activities to get there. So that's the big one. And I'm going to go ahead and throw the second one in too, because this is just becoming so obvious over the last couple of years, is it's not just that we're misaligned on the finish line, you're misaligned on your beliefs. Is that all the choices we make in organizations are based on beliefs, right? And for most organizations, those beliefs are implicit. Like, we all kind of have them, but we don't actually voice them and discuss them. And what really, really sets these high-performing organizations apart is that they align on beliefs. And then as they're executing, they start testing these beliefs while they're executing their priorities. And why this is so important is that you're going to get feedback on whether or not your beliefs are valid long before you get feedback on whether or not your priorities are being executed towards the right results. So aligning on a finish line and then articulating and testing your beliefs, those are the two big things that really make a difference.
Oh my gosh, you're speaking my language. You know, I wrote a book called The Core Value Equation, which is around
how to build a core. Yes.
It's how do you operationalize your values in a business.
I did my homework. Yeah.
I'm like, are you messing with me? So no, I'm like, yep, I agree. I agree so much. I wrote a book about it. It's so. I do have one. Like, I'll counter you on one point, and this is just my perspective. I agree with everything you just said. The only thing I would say is, I think that first of all, I think that HR departments weaponize a lot of these things to try to build qualitative soft skill stuff that, like, without having an end in mind. And they'll say, like, oh, it's just like they want to do it. It's fun. It's nice. And so the BHAG, I think a lot of people get it wrong in that they make that the goal instead of making it like something to aspire to. Right.
Yes.
And so, like, I used a BHAG in my last company. So, but I used it as the way I just described it, which is like, this is like something so crazy. Let's fight to try to build something that would be cool enough that could actually do that. Oh, and by the way, here's the plan for the next 12 weeks. Go do it. And it lines up to the next 1 year, which lines up to the next 3 years, which lines up to that bigger thing. Right. And
you just had the most critical yes and in there, right? Because of course you're not allowed to say yes but in organizations. It's yes and, because sometimes you need to throw something out there to signify the mind step, but not the mind share, but the kind of the step in ambition, right? So, numbers or something matters, because we've got to signal to the team, this is the step, right, that we have to go through. And most people are linear thinkers, right? And this is a big disconnect between entrepreneurs who run companies and the people who work for them. As entrepreneurs think in leaps, most people think in lines, right? And so when you set something out there that's a leap without the clarity of, we probably won't get there. Here's the plan to kind of get 80% of the way there. And then here's what we're looking out for along the way to open new opportunities. But you've got to close that gap. It's like, yes, here's the mindset shift, right, to saying this is what the future is. But also you've got to help the people out out, right, who are part of your team to kind of see some of the steps to get there. You don't need to build it out step by step. And as a leader, you should not be determining, right, the micro steps and activities your team is taking. But people need to be able to kind of, I think, like close the loops and the lines, right? So you're thinking in the leaps, but we've got to give some lines for people to understand where we're going.
Yeah, I love that. The way I thought about it, so I'll tell you what my BHAG was, and which will align to what you just said. Ours was, mind you, I built this company. There was a couple dozen of us when we started, and very quickly grew to about 1,000 people. This is a business that had, I think, helped maybe a few thousand customers over its 2 decades that had been in existence at that point. It was a very small company when I got there that had been around for a while. And I partnered with it, and we ended up owning it with the original owner, who was my business partner. And I said, hey, I want to build a company that can help 1 million humans, homeowners, gain and retain home ownership. Now, mind you, the number at that point was a couple thousand. So to say 1 million is like, it's an absurd number.
Yeah.
But my thought process around that, I'd love to get your feedback on this, was like, who would we have to be for that to be true? Right? So what would we have to be? We'd have to create something so meaningful that would to create that kind of outcome that I have no idea how we're going to do it, by the way.
Yeah.
But but I'm planting that like flag in the sand just to say, like, start thinking, like, again, to be inspirational, again, to set vision. But it was really, the question was, who do we have to be for that to be true? So again, like, there's no real clear answer. Like, you could start to describe what that might look like. But like, if you're like 13 people when you're saying that, it's an absurd statement. Now, you'll appreciate this. It took 9 years. It was a 10-year goal, and we did it in 9 years, right? Okay. But there was no like plan. You couldn't plan for that because it's like it was so far away from reality. So how do you feel about doing something like that? Again, going back to this framework that you're describing around, like, giving people some action steps of what does the next 12 months need to look like in order to even like start to like build a trajectory that points in that direction.
Absolutely. And look, real breakthrough growth will only come from some of that thinking, right? Breakthrough growth is not linear, right? And this is the tension that we're trying to break inside organizations, is linear planning does not get you, right, to the breakthrough growth. So Darius, the simplest way I like to explain is to split between a destination and a direction, right? Most of us want destinations, and that's like the finish line. That's like when you're driving and you're driving from SF to Los Angeles, you're like, I'm going to take exit 405 for Santa Monica. Like, that's the destination. I'm telling you exactly when to get off the highway and where to go. But a direction is more saying, we're going northwest. Like, I don't know if that's going to be Seattle. I don't know if that's Vancouver. I don't know if we're going to stop kind of in Nevada. I know we're going northwest. As your leader, I'm taking us northwest, right? So you can start aligning action. But you're not promising the end state destination. And that goes back to this uncertainty, volatility that we're facing. I explicitly don't want people to set very clear, precise destinations for 10 years down the road. Too much is going to change. And I don't want you heads down. I want you heads up, right? So directions, right, that you start preparing for, and then you set these incremental destinations for the time frame that's appropriate, right? And so strategy is about 3 years as a sweet spot. Sometimes it's a 3-year destination, and I can only set destinations on the 1 year. In situations like post-COVID 2020, post-Brexit 2016, all of the ones that you and I have lived through, destinations were only appropriate for 4 to 6 weeks at a time. Like, that's also okay, but language matters. And we've got to tell our team, this is the destination, and the only direction I can give you is X. And the reason, and you felt this, you're living this, you're going to live it over the next year with interest rates, right? Is that the more uncertainty your team is facing, the more we beg our leaders for alignment, right? The more uncertainty your team knows you're in, the more we look to our leadership team to say, tell me what to do. And that's exactly the time we can't, as leaders, tell them what to do. So that's why I like to go my destination, direction, give them comfort. And if we use a really bad paraphrase US history example, if the gold diggers in the 1800s had headed towards Los Angeles, they would have missed the gold, right? All they were doing was heading northwest and looking for the opportunities that came up along the way.
I love that. What you said something a moment ago that what's interesting is I've been brought up in some of these lower mid-market like scale operating systems. I don't know if you're familiar with like Traction or EOS or Scaling Up, but there's a bunch of them, right? 3HAG. And so I grew up on those systems and implemented them. I even created my own system, just because I geeked out on that stuff pretty hard, and was like, really, it was just out of pain, right? Like when you're growing a company from 0 to 100 people, like there's with no background in this stuff, or even if you do have background in this stuff, like to actually do it's one thing than to just know it, you know? We used to look out and say, hey, this is my 10-year goal. This is my 5-year goal. My business partner and I were talking about this in our new business, because we're like, look, like the world's changing so fast right now. I can't look out. 3 years is a lifetime away. And so for us, we won't go past 3 years. We're like 1 year, 3 year, and like that we're done. Because anything beyond that, it's too much. Like, and I will say this, 10 years ago, 15 years ago, 20 years ago, I wouldn't have said that. Now, I didn't know what I do now, and maybe the world was moving as quickly as it is now. I don't feel like it is. I feel like the world's moving a lot faster now than it was 15 years ago. So I feel like 3 years is about as far as I'm willing to lean in the future. How do you feel about like A, the velocity of change that's happening right now, and B, is the 3 year, and I get what you're saying, during a COVID or something like that, it's like, dude, let's take it day by day, week by week.
Yeah.
But barring some exceptional, like, you know, COVID, you know, just in general, is 3 years like the new 5 year? Like, tell me about that.
Yeah, 3 years is absolutely the sweet spot. When I think of strategy, it's 3 years. Now, I like to think in terms of strategy cycles, right? So if you're a newer company, you know, less than a year or two old, less than kind of 10 million in revenue, you should not be thinking out more than 3 years, right? It's a waste. Honestly, it's a waste of your time to build a 10-year plan or vision. I know some of my colleagues disagree with that, but 3 years is your sweet spot. For existing organizations, they'll argue, well, you know, our asset investment cycles are 10 years, or, you know, this so-and-so is X. It's like, okay, well, think in terms of cycles. 1 cycle, 3 years, 2 cycles, 6 years. And you want the more clarity there. But 3 years is absolutely the value creation sweet spot. More than that, you're not actually having enough clarity of what you're doing to make a difference. Less than a year, it's a business plan, right? And if you're just doing 1 year business plans, you're not going to get to growth. So people will argue, well, 3 years is too long. I'm just going to do 1 year plans. It tends to, you end up downshifting so much. Now, people with your mindset might be a bit different, Darius, but we're talking the general kind of entrepreneurs running companies. 1 year plans, you don't tend to focus on the things which really move the needle, right? And so that's why 3 years is absolutely my sweet spot. So I say 2 to 3 years, most companies 3 years, younger ones kind of 2 years. Now, on the uncertainty element, great question. Now, there's no answer, right? Because we all probably disagree. But I challenge entrepreneurs with this a lot, because people will say, you know, we use the term VUCA for volatile, you know, complex, ambiguous, et cetera. We talk about all of this uncertainty. And I've had people say to me, you know, have we ever run a company during certainty? And so I'm challenging every entrepreneur now. Okay, tell me when you ran your business through certainty. And the consistent feedback I get back, and I'd love your thoughts on, is yes, you know, especially for those who started tech investing in 2000, it's always been uncertainty. But we always had macro conditions as relatively stable, right? Now we have market uncertainty, we have industry uncertainty, and we have geopolitical uncertainty, right? Let alone some of the social changes uncertainty. And so what I'm hearing from entrepreneurs is, I hear you, right? Things have always been uncertain. There's never been a certain pathway to running a business, but my level of geopolitical uncertainty is now adding something else to the mix, which is affecting how I think about it.
Yeah, I mean, I feel like, again, my framing is different because I'm 45 years old. So 20 years ago, I was 25 years old. So I didn't, you know, I wasn't building a company on the same, like I wasn't building businesses on the same foundation, right? Or with the same goals or with the same experience. And I think what was different then was it was a more of an analog world.
Yes.
And less access to information. It was more expensive to do things. It was more expensive for information. Things came to the market slower because of just the nature of analog information dissemination, right? And so I feel like things were just slower for that reason. I mean, I had, you know, just to put it in context, like 20 years ago, people were still getting faxes. Okay, like some of my listeners may not even know what that means.
If you're in a healthcare startup, you're still sending faxes.
Yeah, which is so weird.
Yeah, I've got several friends running companies in that space. So yes, to our listeners, a fax machine was something that you would scan a document and it would send it to someone else's office and print off like a printer. So basically, two printers hooked up electronically, and it would take quite a while back in the day to send those things.
I was very hip and forward, and so I had a fax computer that it took the faxes into.
Ooh.
Yeah, I mean, you know,
You're the cool kid in the office. Yeah,
I've always been cutting edge, you know. But so yeah, like that's the world. So I think the world was just slower.
Yes, but think of what it took to start a company then, right? In terms of server cost or coding cost or software development cost, the ability to raise money. You had to get on planes. Like we didn't have virtual kind of all of this stuff. People can raise their entire round simply through Zoom and Teams calls now, right? And that's only the advent of the last couple of years. So look, the exciting thing is that this means our feedback loops are just an order of magnitude different. So, in CS, you're facing more uncertainty now as an entrepreneur, but can you really argue there's not been a greater time to start a business when it comes to startup cost and velocity of feedback loops and ability to build a team from all over the world? Like this should be one of the most exciting times that we can remember in our lifetime to embrace in order to build a business.
Oh yeah, no. That's the other thing I was telling people. I'm like, it's never been easier or cheaper to start a business and or stop a business, right? To your point, the feedback loop tells you you're wrong, you just turn it off, right? In the past, you'd be so pot invested. You're like, I can't turn this off. Like, I'm like, my whole life savings is in this because it costs $100,000 to start a business. I have to get an office. I have to get a fax machine. I have to get computers. I have to, I have to go find
server
talent.
Room. Do you remember the server rooms? Yes.
Yeah, totally. I had server rooms.
Yeah.
So I think that I would tell you is the positive. But I do think that you get it because of those quicker feedback loops. It means change happens faster. It means
so much faster.
More competitors because the barrier to entry for most businesses is much, much lower. Right.
Yeah.
You can dude, there's companies out there that you probably know of that are like venture studios that literally the only thing they do is test ideas and then as they get information that solidifies their idea, they then invest more in that idea. Right. And they're literally just testing if an idea even works. Right. You could never do that in the past. So what I'm saying is I'm doubling down on the world is moving faster because of that. And it makes it harder for a lot of people to run a business because they can get disrupted easier. Their competition can come in easier than it could in the past. The moat is thinner than it ever was in a lot of areas for this reason. And layer on top of that, to your point, we have social differences that are exacerbated right now, political differences that are exacerbated right now. You have market volatility that's reacting to all that, and you have geopolitical issues that's reacting to all this. Plus, the market's reacting to that, which are then causing our businesses to react to that, right? You add all that together and I go, man, the only thing, I swear to God, I was talking to a friend of mine. I'm like, man, is there a way for me to make money on just investing in the VIX? Like, I'm just going to load up on the VIX because I know. And I was trying to figure it out. How can I make more money on the VIX? And it was like, you couldn't do it, right? I did the research on how to buy VIX contracts. And because I was like, the only thing I'm certain of is that there's going to be a lot more uncertainty. And so if that's so you wrote a book about this. How do we let's talk about the book. So the book is Survive, Reset, and Thrive. It's all around how to thrive amongst this uncertainty. Give us some of the premise and then give us some of the answers.
So the premise is growth is a loop, not a line. And by that, I mean that it goes partly to the kind of the fixed mindset versus growth mindset is that once we're thriving and performing, and it goes back to what we're talking about as far as the volatility of change right now, we assume we're always going to stay thriving and performing. And we get these market shocks, but become so committed to the pathway we're on, we assume, I call it I'll just wait this out, right? Or I can get through this. And you've got to be willing to say it's going to be a loop. And that loop is the survive phase, the reset phase, and the thrive phase. Like you're going to get system shocks. Now, sometimes those are macro. Like COVID, like Brexit, like war, they're often internal. Losing a major customer contract, an investor not coming through. That's a shock too. You've got to be able to stabilize your business. And then the hard part is the reset. And that's for change. You've mentioned change a couple times. And what makes it so hard is that we really don't like to change what we're doing when we feel we're on a pathway. But after you survive, you've got to go through the reset and be prepared to change your strategy. And then you can get back to the thrive, being that consistently high-performing organization. Now, the challenges I'm going to repeat purposely is it's a loop, not a line. So you can be in thrive and have to go back to survive, right? Competitors catch up. The moat, as you mentioned, are thin. You've got AI disruption in your space. And if you're prepared to kind of cycle through that loop, you can outgrow anything. And part of the power move is building what I call this proactive survive. So you're setting your business up so it's always stabilized. Now, that's not running too lean. You got to deploy cash for growth options, but are your fixed costs low? Are your customer modes as strong as they can be? Do you have clear lines of communication? Do you have a strong cash runway? And when you do that, Darius, you've got less to do and survive while everyone else is catching up. The reset becomes your power move. Like, are you prepared to change? And then you can go back to that thrive. So that's the secret, right? Now, there's little bits of secrets within it, but why most companies struggle is the reset part. And we do this to them. Like, think of all the conferences in 2021 where the title was Don't Just Survive, Thrive, or you've got to survive to thrive, or now that you've survived, thrive. And 99% of the time, when you see these two words, you don't see the critical word in the middle, which is reset or change. And wow, are people afraid of the word reset? Like, I can't tell you how many times a week someone says to me, we definitely want to go through this, but can we not use the word reset? Because my team will get scared if we use the word reset. Can we use the term revisit or relook at or, glance through once again, right? And I'm not making these up because we don't want to use the word reset, but there's some power in saying as a leader, every year we're going to look through this. And when there's a shock every time, and we're going to reset if we need to be a better thriving organization on the other side.
That's a glance through on, what did you say? Glance through?
Glance through everything you can imagine is trying to come up with a synonym for the word reset that doesn't mean change. Yes.
You're going to scare my people. You have to pick some ambiguous synonyms. That's really funny. Also, because the team's always worried about things that they shouldn't be worried about anyway, which is it's probably another thing. I wrote a couple things down, and you touched on one of them, which is this idea of like really stabilizing the business, right? But doing this like proactive surviving. So I look, you're like, again, you're speaking my language. Having come from an interest rate volatile business, like mortgage lending, mortgage servicing, by the way, is probably it's like oil and gas, and like anything that's interest rate driven are businesses that like go have fun in them. Because I lived 20 plus years in the interest rate environment, and that's a gnarly business. Well, it's as gnarly as the interest rates are, which are pretty gnarly, right?
Yeah.
If you look at I'll give you two time frames. It's just for our listeners who are like, what's Darius talking about? I'm like, yeah, it's real simple. In 2021, you were getting home mortgages at 2%, and those are at 8% right now. By the way, if you go back to 2016, they were at 2%, and then they went up to 5 or 6%, and then they went back down to 2%. Like, that's like over 100% change in interest rate movement in 3 years. So we just had a 250% increase the other way. I got out of the business, and I was like, I'm over this, man. This is, we were talking about, having like principles and beliefs in the business. I had a firm belief that I was like, I don't think my belief system is aligned to a business that you have to run on the axis of this type of volatility, because you end up having to like scale up and scale down really fast. So it's hard. Like, if you're a relationship person, that's painful. You're like,
that's painful.
Hiring and firing very quickly, and you have to. You're not given a choice. So, I think that's a really good example. I'll use myself again. I think I'm a really good example of someone that had to get into that, survival productivity mode, which was like, hey, we're always looking. So what I did with that, and I'd love your thoughts on this, Rebecca, because I was like, hey, we're always running lean-ish unless we see that there's a market opportunity coming, and then we're going to lean in as hard as we can, because we're in a volatile cyclical business that, like, when it gives, and when it takes away, it takes away. And the minute we start to see it go the other way, so it went the other way when Trump got elected in our business. Brexit, rates got cut. Trump gets elected, rates spike, and then he was the whole bag of, gosh. He was a really not fun for interest rates, because he was like all over the place. Started a trade war, rates go down. COVID, rates go up, then down. And so when you're in a business like that, you're always cutting and adding and leaning in, and you have to be like super agile. And I always used to joke, I'm like, I have like muscles that most entrepreneurs don't have, because most businesses are not that extreme. I know a lot of entrepreneurs. Most are not affected by macro cycles in that way, or micro cycles in that way. So my question for you is, using that as an example of an extreme business, but looking at a more normal business, because I think most businesses are a little bit more normal than that, where the volatility is not as extreme. What is it that, like, when they're starting to build these muscles, like, how do you recommend they do that? Because I know how I did it. Mine was, necessity is the mother of all invention. It was like, go out of business or do it, but most people aren't going to have that extreme of a cycle. How should they think about that muscles?
Absolutely. Absolutely. Interesting. I was with 300 CEOs in the construction and real estate industry last week. So that is very much top of mind, how to do that. But the notion is when you keep swinging back and forth, you never really build capability in either, right? You're never really, I mean, you can see the Democratic you, not the Udarius, you're never really great at, performing during lean times. You're never really great at kind of growing through kind of frothy times. And so there's this power in being proactively stabilized, right? And so that way you're actually building capability. But, markets can be very volatile. Yours, in one of those extreme volatility cases. But when you're constantly swinging, right, where's your capability building? And so I call it I call it steady state survive, right? Now, leanish is exactly how I call it, right? We're in the same mindset here. I don't want anyone running overly lean because if you're sitting on too much cash, you're not deploying it to the right way. But you need to set the metrics for, I call them the 4 C's, for cash, cost, customers, communication. And you agree as a leadership team, where is our minimum boundaries? Like where is the lowest, even in the best of times, we should fall on these, right? And it's tempting to break those when times are good, because when times are good, our brains reframe the environment to times will always stay good. And we know, even if we know deep down, they're going to swing. So you set your boundaries across your 4 C's of the cash, cost, customers, and communication, and never violate those boundaries. And that way, when the market kind of gives you, right, the headwinds versus the tailwinds, you've still got that base to rely on. You then go into your more stronger survive moods, which also employ some of the power moves, doing things like repurposing and partnering. So what assets can you reutilize? Like how can you do even more for learning velocity, which want to come back to learning, and then go the other way. So you build the muscle by doing it proactively. Like I explicitly don't do recession proofing workshops because, if and when a recession comes, you should already be set up, right, to survive through it and get out of it faster than everyone else. Like you and I can't stop the market from punching people. We can't stop this interest rate swings. If we can influence the Fed, I'm sure we would try to, right? But we can help build businesses that are better at taking these swings than everyone else. So proactive survive, then be prepared to change, right? But agility and change without strategy is chaos, right? A lot of times entrepreneurs will say, well, we don't need a strategy. Things are changing so much. We're just going to be more agile. It's like cool. Like I love the mindset, but the definition of agility means making good decisions quickly aligned with strategy. Agility without strategy has a definition. It's called chaos, right? And so you need this alignment at all times, even though it goes back to our earlier conversation, it's a direction versus not a destination. But you've got to build the muscles, just like working out in the gym. If you constantly let your organization swing, you have not gotten great at either things, right? So others are going to do better in frothy times and others are going to do better in lean times.
What do you think? And I love what you said, because that, like I said, man, I should have just been like sitting next to you the last 20 years, because everything you're saying is like, it's like, that's how I think about it. But one of the things that I got really clear on, which I'd love to hear your thoughts on, was like, okay, look, I'm in the volatile business. I can't control the markets. What can I control? And so I was like, here are the things I can control. To your point, cash, I can control making sure I run lean in the right departments and investable in the ones I can invest in. I make sure I'm constantly looking for creating efficiencies in the business. I'm looking to outsource where I can, because I can have a little bit more flexibility as far as moving like capacity around in the business that way. But one of the biggest things that I did, especially in lending in the origination business, it's very top heavy as far as how you make revenue, because you make your revenue per transaction, right? Construction business would be the same. Construction business is different in that you have a long like lead time, because you got to go and
very long lead time,
right? Yeah. So it's real sketchy, right? Then and for listeners who know what I'm talking about, like they do land banking. They get super like creative on how they do these construction developments over time. I learned a lot about that as I started investing in the space. I'm like, oh, this is really like, they're smart. There's a lot of like smart people figuring this out. But the one thing that I was going to ask was, how do you, when and maybe if you use construction as a good example, how do you like plan for, let's use the example of a construction build out where I'm building a big project that takes 3 to 5 years or 5 to 7 years, but I'm building it on top of this uncertainty. How does one start to build a strategy for a longer term? Because I started to struggle with it. I'm like, man, I can't set goals for 12 months from now because there's so much out of my control. I can set goals for like projects within a quarter, but like, I don't know what's going to happen with the interest rates, and that affects too much of my business. So I got really just focused within, I would set goals for the year knowing that they might move around, and got really focused on projects that I thought would move the needle to that eventually. But when we look, and again, my business is a different business, but looking at, let's say, a construction business where you have 5 years to do a project. I got to go get land, entitle the land, do all these things, and then I got to build it, and it's huge capital expenditure. How does someone get comfortable with that type of investment, knowing that there's so much volatility, so much change, so many things out of their control? How do you think of that?
I'm going to answer the cliche one first, and I'll go into details. You got to get comfortable with being uncomfortable, right? Is that when you force comfortability or you force quantification on things which are inherently not comfortable or not quantifiable, you do yourself a big disservice, right? Because then you trick your brain into thinking things are stable and predictable because I put a firm plan around them, I have numbers. And that's actually a trap, right? So sometimes leaders think they're doing their organization a service, right? By setting these very clear goals and building all these quantifiable plans, but you are inherently not in an environment where you can do so. So you've got to shift from planning to preparing, right? And so preparing, you're making decisions based on beliefs. So at every decision point, you're saying, let's align on beliefs. What are our beliefs? Our beliefs when we started this project were X around interest rates, Y around regulation, Z around the stability of our partners. Do we still take those beliefs? So, you're constantly parallel pathing, Darius, not just executing, but stress testing your beliefs. And this is not a skill set held by very many, which is why there's so few high performing, companies in industries that are that volatile. Is your beliefs form your choices? Your beliefs can be and should be tested. And that parallel path is critical. The next is that parallel pathing of planning and preparing. Plan for only what you can and no more. Like, we're not throwing away planning, right? But we're only planning when a linear model can tell us what happens next, plan. When there's facts that are reliable, plan. When that is not the case, you've got to make decisions based on beliefs, not facts. Now, this is a scary statement, right? But you've got to learn how to set beliefs, make choices based on those, and then test those along the way. And when it comes to the goals, kind of really separating between what's an output goal, like my team members completing an activity or project, RFP is turned in, contract is signed, et cetera, versus what's an outcome, right, or an actual metric. And you've got to kind of build that back in. And then finally, Darius, I'm always looking for my favorite type of move is called a no regret move, right? And a no regret move is one that even if we got our beliefs wrong, we would not regret making this move. And I find it very helpful, especially in industries like this, to constantly stop and say, what no regret moves do we have on the table now? There's always more than you think, right? And really forcing the mindset of, this move is based on our beliefs and we have not affirmed those beliefs. Let's pause. Versus this is a no regret move. We could get this belief wrong and this would still be the right move to take. And adding that discipline into the decision-making process makes a lot of a difference.
So when you look at, first of all, like anyone that's just listening right now, like you may want to like replay that, put it, number one, don't listen to this at 1.5 speed because Rebecca talks fast and so do I. So make sure you put that at like a 0.8 and go pick up your pen and paper and take notes because that was like knowledge bombs that she just dropped. I'm a student of the game and I have not heard someone explain it that way before. So that was awesome. But my question, I really appreciate what you just said. So I have two other questions and unfortunately we're running out of time here. So do you mind, can you run over for like 10 or 15 or 10 more minutes? Are you good?
Yeah, I got 10 more. Yeah.
Cool. I think I booked this for that time, but I always padded it. So my question for you is this, like two questions. Number one is, we're talking about organizations that are elite organizations and people can, aspire to become these elite organizations. I'm telling you, like a lot of the stuff you're describing, I ended up doing just again, out of like necessity to be successful. Yeah. And in what I would argue less volatile times. But now I feel like the world's caught up. It's volatile for everybody. Change is happening. AI is here, the markets, the geopolitical, all these things we talked about. So if change is the only thing that's constant, and people want to start somewhere so that they can start to build a more, flexible organization that has this muscle memory so that they can be an athlete in this environment, not a victim to it. Where do they start?
You start with your beliefs, right? And really sitting down with your team and what's at first going to feel like a meandering conversation. It's not, right? And say, what do we believe? What do we believe around kind of macro trends, right? What do we, interest rates, inflation, political trends, what regulation is going to impact our space, social trends, hybrid working, people moving, demands of employees, industry trends, consolidation versus fragmentation, new entrants. And really, what are our beliefs? Identify those top trends. What most people do, Darius, is they spend a lot of time talking about trends, and then our brain associates a trend as a risk. And I see teams do this all the time. They relabel trends as risks. And that just, our brains are messed up from the very beginning, right? A trend has opportunities in it, right? And so trends and then beliefs, and then you fill out the sentence structure like if X, then Y. If we took this belief, then Y. Then what should we be doing? What is the growth opportunity? And we are really programmed to protect ourselves from downside risks rather than look for opportunities and upside risks. I call them the kickers and the killers, right? And so the question is not what could happen, because you and I can't predict the future, and nor can any of your listeners, right? The question is what could make us and what could break us. And I find teams usually spend about 90% of their time on the what could break us and less than 10% of their time on the what could make us. And the first time this happens consistently, I have a what could make us conversation with the team. Almost everything they identify could be reclassified as a quick win. Like that is how bad our brains are framed to kind of think of possible upsides. So you've got to start building this capability. So align on beliefs, again, repeating, don't ask what could happen, ask what could make us, what could break us, and start testing these beliefs as you form some of your other choices. That's absolutely where you start.
I love that, man. What could make us? So it makes so much sense, though, right? We're wired. Our DNA has negativity bias built into it. So the saber-tooth tiger, isn't going to kill us, right? Like, so this is a human condition we're fighting against.
Yeah.
But I love that. Start with beliefs. What could make us? What could break us? Don't spend 90% of your time on the break us without giving as much energy to the make us.
Built the other way,
right?
Yeah.
So that makes so much sense. I was just thinking, I'm like, how many times have I done the what could make us? I'm like, I don't think I've done it. I'm going to do it now. You just got me super motivated. All right.
I'm just giving you some homework, which is the professor in me is coming out an hour into our conversation, Darius.
I love it.
Yeah.
I love it. Well, I'm going to ask one more question and then we can move over to the greatness question. We'll end up on the greatness question. Obviously, hey guys, the book is Survive, Reset, Thrive. I'm going to throw it in here now before we get to the end of the show so that we make sure that you guys go out there. The book is coming out, you said February 27th. Is that correct?
Yes, February 27th, 2 weeks.
And I'm going to preface this. I have two more questions. So I'm making sure that people don't just get off the show. I want you to listen to this, then listen to the next two questions. So make sure you go out and buy the book, Survive, Reset, and Thrive, Implementing High Growth Strategy for Lasting Business Resilience. And it's going to be where all books are sold. Is that correct, Rebecca?
It is. It's already on Amazon, Waterstones, Target, wherever you buy your books, it'll be there already.
And if they want to go learn more about you, where would they learn more about you at?
Yeah, absolutely. So just put, surviveresetthrive.com in. You'll get the website with lots of videos, other kind of articles, some background, all the people who have used the book and endorsed it, from Formula One teams to companies like WD-40 and Gorilla Glue. So kind of go explore. So surviveresetthrive.com. Look at all of the stuff there.
Awesome. All right. So my last two questions, and we'll make sure we put that stuff in the show notes for people that are driving and cannot write this stuff down. So one question is the way that because again, I didn't even know I was 25 years old when I got into my industry. I didn't even realize I was going into the world's most volatile industry. Or one of the most volatile industries. I didn't realize I was going to a commission only business. I didn't realize all these things. And I was like, oh my God, this is a freaking treadmill. The first of the month, I'm at zero every month. And then I got my best year, my worst year back to back. Who knows, right? I didn't no idea that that's what I got into. So quickly I was like, man, I have to figure out a way to get some reoccurring revenue here because this is just painful, right? So that was my first. My first of the last two questions are how did you do you think that that's a big part of this is starting to reframe your business or starting to look for reoccurring revenue opportunities so that people can start to understand their revenue and cash flow to do some of the protectionary measures that you mentioned? Do you have a thought around this? Is there any belief that you have?
Yeah. So there's no silver bullets, right? And recurring revenue, absolutely. I'm always looking for recurring revenue, but people tend to gravitate towards a silver bullet. Oh, if I just make this a platform, if I just kind of put in recurring revenue, if I change this to a solution rather than a product. So yes, but, and I'm going to use yes, but purposely and get in trouble for my clients where you're not allowed to say that, is there's no silver bullets, right? So what is your actual differentiation? And frankly, what's your right to win? Right? Why do you have a right to charge clients on a recurring basis? I always say get clear on that first, and then the monetization will follow from that, right? Really focusing on what is our differentiation. And it's simple questions. What do we have that others don't? What can we do that others can't? How can we build moats? You have to answer those three questions first. Then we figure out how to monetize that. Like, what do we have that other companies don't? What can we do that other companies can't? And how can we build moats around our advantage? And then, yes, cash is king, right? Cash was king 20 years ago, 50 years ago, I'm sure 500 years ago, and it still is today, right? So what you need to do to get those minimum boundaries of cash flow in to your survive basics are absolutely critical.
Love it. All right, we're going to end on the greatness question. So I gave it to you before the show just so you could plant the seed. Here we are at the end of the show. Rebecca, what is the number one barrier to creating greatness that you've overcome in your life, and how did you overcome it?
So that was actually a really interesting question that I had never thought about, right? I think the number one barrier for me personally was the notion that it's people assuming that you can't because you haven't, right? Well, females don't do economics and strategy, right? Young people can't do consulting, right? People from so-and-so can't do X, right? And the framing that, you can't do that. I mean, I got asked for years, like, what do you want to do when you grow up? And it's like, I'm doing it right now. Like you're watching me do what I want to do, right? But because I was younger and because I was female, it was assumed that I was just kind of hanging out till I'd find what I actually wanted to do and go work for a big company somewhere. So I think that was probably for me. And then I think more generally, it's the framing. We unframe uncertainty as bad. We frame uncertainty as something to overcome or to get through, to wait through till we get to certainty on the other side. And as soon as you stop doing that, as soon as I stop doing that, and you frame uncertainty merely as a series of future events, which may or may not occur, whether or not those events are good or bad depends on what you're trying to do and how you're set up. So I just worry about figuring out what I want to try to do and then get myself really set up to succeed in whatever environment that is.
Love it so much, Rebecca. The book is Survive, Reset, and Thrive. Guys, go out there and get it. Man, what a fun conversation. So much appreciation from here at the Greatness Machine having you on the show, Rebecca. So much gratitude. Thank you for joining us today.
No, it was my pleasure. Thanks for giving me the time. I love talking through this stuff, and it was a pleasure to meet you too.
Definitely. You guys, go out there, buy the book, support Rebecca. Until next time, peace out. We love you. You are listening to The Greatness Machine, and that's a wrap for today. Listen, if you love what you heard, subscribe to the show on whatever podcast platform that you're tuning in on so that you don't miss any of our future episodes. We have tons of great people coming on, and we're stoked to have you here to enjoy it with us. Leave us a review. Tell us what you love most about this particular episode. We love getting the reviews. We love to see what you guys love most. And if this particular episode, made you think of someone who's leveling up in their business and in their life, print screen, share it with them. Leaders are the best givers. And after all, we're all here to support and grow with each other. And in case you want to see some of the fun behind the scenes shots or some of the things that we're doing, I'm actually writing about this in my weekly newsletter. Go to www.therealdarius.com and subscribe to my newsletter. We're talking about fun things like business and life and mindfulness and cryptocurrencies and gosh, I don't even know, everything and anything, but it's tons of fun stuff I write about. I try to get it out on a weekly basis. You can subscribe at www.therealdarius.com. And with that said, look, thank you guys so much. I appreciate you. I love you. Peace. We're out of here. See you guys on the next one.
She's my lover.